Hello, traders. It is Tuesday, the 20th of November, 2018. It's 8:01 a.m. Chicago time, 9:01 Eastern, U.S. time. Thanks for joining me for another Trader Bite. I'm going to start out by saying and warning, just like I did in the Head Trader channel on Convergent Trading, that today I wrote, notice ES depth pretty thin again, movements very fluid, higher volatility ahead likely suggests adjust risk for wider stops and wider targets. Keep your R factor steady. If account is below 50% of the margin requirement of the contract you're trading, if you're trading futures, I highly recommend moving to sim for the day and staying so you can stay active and limber with the market without risking a huge percent on every trade. When volatility picks up, it can take a bigger chunk of your account if you run into a streak. So that's what I'm going to start the broadcast with today, because we do have a very fluid market this morning. I'll go over that. The key element here is that we're dealing in the ES in double digits with the inside market in the 30, 40, or 50 contract depth. So the NASDAQ is just getting whacked. 141 points, down 2%, over 2% from yesterday's settlement. Big time baller territory there. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As always, I am sharing my opinions, and they are opinions based on 18 years of experience trading actively, professionally, the whole time. Prop, mostly. So take it all with a grain of salt and do your own homework, but exciting day ahead, it looks like. So like some of you said, strap on your helmet, put on your knee pads and shoulder pads. We're going in. So the overall sentiment, risk off, very clean and clear risk off this morning. Again, the NASDAQ down 145 points, down 2.17%. Crude oil down $1, 1.85%. The DAX is down 167 points, 1.5%. The Dow is down 354 points, 1.4%. And the S&P off 38 points after being off yesterday from close to close, after being off yesterday 46 points. So it looks like we pulled back for a dead cat bounce, and we are likely to continue lower. I'll show you what the order flow looks like overnight, and if you're a buyer or have been a buyer, then wow, you've got brass cojones. The dollar's up, the bonds are up 8 ticks, the Bund is up 24 ticks, gold is up $1.30. So even though risk is off, we're not seeing really big numbers on the safety assets this morning. So allocation is off risk, but moderately on safety. So that's how things are shaping up. We did have some numbers this morning. We got housing starts and building permits. Earlier today at 7:30, housing starts came in just above expectation. Building permits came in just slightly above expectations. Really important for crude traders. The OPEC delegate for the UAE says very likely OPEC will cut production compared to the previous period. This is an initial agreement on a cut, but the amount hasn't been decided. And I think the meeting ends next week sometime. And so that's on deck, but it's not really helping crude at all. Again, the dollar's strong today. So that's how things are shaping up. Let's look at what we expected yesterday versus what we got. This weather is just not for me. So here's what we expected yesterday. Let me make sure this is in HD. Yeah. So yesterday, the primary expectation is for a push into the 34-35 area, if you recall. And then I expected a drop out of the prior day's range, so I expected a push into 11 for a small bounce, and then I was looking for a continuation down into 98 or 92 as the key plan. And so that's what we were looking for. Otherwise, we were looking for it to be a sideways market that later on gets an impulse higher and starts tackling the higher high we put in on Friday, ending the one-time framing down. And so, but what we got is remember, a push up into 34.35 right there. You can see this stock zone is at 35 right here, this gray line. And then break below, bounce, break down to 27.11 stock zone, bounce, and then continue down to 98 and 92 potentially. Here's what we actually got. There's the opening swing, 27. Remember 27.50? Yeah, you remember 27.50. And then a push to 27.33 for an opening swing. And then where do we go? We push to 34.75. Remember 34.35. This stock zone hasn't moved at 35. It's now very important. And then what was next in the anticipated scenario? A push to 11. We get down to 10.25 for a small bounce into the prior range. Yesterday did not attack the mid, not once, just not once at all. Although it played really, really nicely with the full session VWAP. And then wacko, it goes down to 98, drops into 98 down here. And then it just continues on. And we end up closing the point of control, 2688. This is a point of control from last Thursday, I believe. And then we go into complete balance, and then we end up shifting the point of control down, and we end up with a B-shaped profile. B like this. B all you can be. B-shaped profile, long liquidation. Just constantly squeezing the sellers. Very interesting back here as the market puts in a new low and starts to consolidate and go sideways. We see the delta cross the zero line and become positive, giving buyers a little bit of hope here. And then again, VWAP shuts off the buyers. Very clean test there against the stock zone at 27.05, and then it continues down. And then we finish strong into the close. The relative delta yesterday, look at that. Really interesting. It just decides to turn positive on the large lots. It decided to turn positive into the close, cross the zero line, but overall just did not have the ability to hold on to higher prices overnight. So yesterday's scenario one was on point, except that I stopped at 26.92, and this continued down to 26.81, 10 points. But the idea is not to predict where it's going to go to. The idea is to have some sort of a plan for when it rotates down so we can hang on. To it continuing lower. This is the bigger picture here. This is the composite. So what we've done here, let's kill this info box. What we've done here, we've made an all-time high, pulled back, retried on that all-time high, lower high. Then we get this hard drop in October. We bounce back up to 28.19 Now remember this number, 28.19 28.20 basically. It's rounded off. 28.20. Very, very important for the bulls. And then we hold the 28.20 for lower lows through the month of October. This is a high volatility, high range, high volume. And we push 26.03. 26.03, huge day. We get an inside day the next day. We gap up and we hold this high volume node. Remember, 27.50. We hold in this high volume node just as we would expect the market to do in the MC point of control for the year. We hold a high volume node. We resolve to the upside, which looks really good, really good for buyers. And we end up targeting, and if you recall, during this period, I was speaking about the 2820 likely to be next. We target 2820 and we come up short. The next day is an inside day, which resolves down. And then we fill the gap in, and we went into this one time framing down, lower high, lower high, lower high, lower high, lower high, lower high, until last Friday, where we broke the one time framing down to the upside to 2750. We tested to like 27 48.75, 27.49, something like that. We didn't quite get to the 50. The 50 is the low volume node in this area, key low volume node right there. Rejection area, rejected again, and then yesterday it expands to the downside. So unable to hold on to one-time framing up and put in a higher low to maintain the trend up. And so what we have is a pattern that looks like push, pull, extension, correct, and then it pulls back to a higher low, and it looks like we may tackle this 2820 in the next rotation. But what we're doing is we're breaking this low, which really likely to cause us to spill into, this 2650 is another key area. But we're likely to retest to head towards that 2603 for the next test. This area is fairly blunt. If you look at the profile in this area, you see how it's fairly blunt. This gives us an indication that this is likely to be a very highly contested area. Now, you cannot see this with moving averages or fibs. You cannot see this with price action. You cannot see this with anything but volume profiling. That we are not climbing down a mountain, right? And continuing to slip like we have over yesterday, that we're actually going into an area where participants had traded quite evenly through the range, all the way down into about 2610. And so as we drop, the expectation is, oh, this is going to look like October and we're going to slam it, and it's just going to, just hold your nose, get short, and hang on. But just understand that through this range, there was a lot of contested trading. So if we expand out to see what the volume profile looked like in these days, you'll find that the profile was quite blunt. So you can start to see that right here in the most recent past. And I'll get through this a little bit faster here. I know it's taking a lot of time. But you can see that there's just no consensus, some consensus on price, no consensus, and so on. And that's what's expected. So what I'm expecting here is a lot of strong movement, a lot of volatility, whiplashing like we saw through parts of October, because we contested this area quite heavily on the way down and on the way back up. So it's not going to likely be a bunch of B-shaped profiles where the volume is at the low, the volume's at the low, the volume is at the low, where we're moving the value area and the point of control down quite steadily and forming singles up top with clear rejection. What we're likely to see are profiles that look a lot like this, on the way down. It's just going to be a lot of contested ranges and boxy profiles. And those are a little harder to trade, a little harder to read. So the reason I'm telling you this is to help you kind of gain perspective, hopefully. I don't know what's going to happen. I don't have a crystal ball. I don't have a connection to somebody who knows. But just reading what's happening in this area, just be careful. We're likely to see a lot of whipsaw, a lot of back and forth, and it's likely to wash some people out and really screw some people up. So just be careful in the range down between 26, where we are now, 2650, all the way down to 2600. We're likely to see a two-way contest. Here's what the overnight looked like. We opened right back up, had nothing in terms of buying. The overnight inventory is short, and it's even through the Asian session, we held a downward skew, and we just accelerated down after about 5 o'clock Central, 6 Eastern. We've accelerated down. We have really high volume, relatively high volume on the overnight session, 363,000 contracts, about 3 times the norm. And here's your typical, here's what I was talking about in terms of the type of auction that we're likely to have, a very well contested auction. I mean, imagine trading in this range here, trying to catch the continuation of this move. You're likely to get washed out here. So again, just the way I started this broadcast today, it is a good day to extend, if you have the capital in your account, to extend your stop and extend your targets while maintaining the same R factor. And so you're going to need a wider area for your trades to work out in this kind of environment. The inside market's still trading in the single digits, in the 70s, 30s, 60s, 40s, 50s, 80s. And we're talking S&P 500 here, which is usually in the 300-400 contracts per price, in the thousands even. So this is where we are. Take a look at the order flow overnight. Look at how this looks. So we close right in here. This is yesterday's pit close. This is the reopen. Remember, all times are central. I'm in Chicago. Sellers all the way into the close, a little bit of a bounce and sideways. And then from there, you look at the shadow or shading here, and you'll see that the market is just hugging the low end of shading here, just squeezing the low, squeezing the low, squeezing the low. And if I zoom in a little bit, you'll see that there's multiple attempts at support that just get blown out, blown out, blown out, blown out, blown out. And we're going to see a lot of that, where we'll see good bids, good liquidity below, and we'll see it push through, bounce back up, and then push through again. That's very, very likely today for the session. As I zoom into the order flow here, we see that really the sellers are just not are getting paid, and buyers are just not getting much relief as we move to lower prices. Again, just pay attention. What are we looking for today, so I can wrap up here, because this is taking a long time. I really need to close my eyes before the open. So yesterday we ended up with a P-shaped profile. We have a large gap this morning. We closed yesterday at 26.9650, I believe, if I recall correctly. And we are currently trading 26.54. So we are about 40 points below. Okay. There are some key confluence areas, stock zones, that I'm paying attention to, namely here and here. We pushed the overnight low, which when I came in this morning at about 6:15 or so Central, we were up here, up in this area with our low, and we have pushed our low into 26.50 now. This is a key area. These two confluence zones, I'm watching very carefully on how we behave. We've shifted our point of control down overnight to 26.57. And then what we have here is a gap below all recent areas. We're really trading. We're really trading into. Let's see, what is the date we're trading into? What's the template day? We're back to October 30th. It looks like October 30th. Yep. We're trading back in here. The current price is right in here, right in here. So these 2 days are our template days for today. I'm going to look for responsive buying against the stock zone confluence that we're up against right here. I'm going to look for some responsive buying back up, a potential reversal area here, back into 59, potentially 60, 62 on the open. But overall, I'm expecting an open that responds, potentially attempting to push harder. And then I'm looking for the first impulse down, and then I'm going to join that impulse to the short side, look for the break of the overnight low, and then start working. And I'm expecting a heavy fight here in the 2640, 2636, bounce back up, wash a few shorts out, continue lower. And this whole process on the down move is likely to be heavily contested. Okay, because we're opening in a gap zone on a very active session, a high probability of an open test drive, open drive type behavior. This is a good day to just stand by. You may miss the trend for the day, but it's a good day to stand by and watch how it opens. Don't feel like you have to be a part of the action, especially if you're trading a small account. My definition of a small account, anything under 20, 25 grand in the ES is relatively small. So the secondary scenario is we push, we start to move lower, push back up, we move next to the next confluence zone in the 2640, and then we're unable, and then we start to get responsive. Prices drop far enough to surprise sellers. Buyers come in, impulse up, consolidate, hold steady in this 2650, 2656 area, and then start to push back up. I do not expect the gap to be closed, but there's likely to be a surprise here. And remember, this area is blunt as well. This is not both these areas, the areas underneath 2698, 2696. These are pretty blunt areas, unlike the areas above, which lead us up to 2750. These are pretty heavily contested areas based on the composite profile of all volume traded in this area. If it's blunt like this, it just means buyers and sellers were active throughout, because there's no volume unless a buyer's there and a seller's there. And if it's blunt, that means there's two-way interest, and it's likely to continue that way. Your tertiary scenario is likely to be an open test up strong and then drive down. Okay? Open, test up strong, and then drive down. And what we have here is a probable trend day down into 2610, 2603. Okay? So that's the third scenario. Why am I doing these scenarios? For those who don't understand or are new, the reason I do these scenarios is not to predict the future. It's not a prediction machine here. The reason I do these is because I'm combining the context of what I'm seeing with the stock zones that I have, areas that I plan to interact with the market. These are the stock zones, gray areas. And the goal here is, once I'm in a trade, yeah, I can use a moving average to figure out what the trend is and all that, but that's not going to help me hold on. Once I'm in a trade, these plans tell me what areas are likely to see a reaction if we get that kind of movement. So I have a plan of attack for the day, just like when we go into battle. It's nice to say that, yes, I've got a big machine gun and I can just go and cause some damage, but it's better to come in and know how your troops are going to move up the field, what areas are important, what areas are risky, and where you should end up by the time this battle is done. And that's what it's all about. This is not about predicting the future. This is about hanging on, which is your biggest problem in trading. This is about hanging on after you've executed a trade, as opposed to what everybody else does, which is to look for a spot to get in, behave like a scalper, take 2 ticks on a win, hold for 6 points on a loss, and not really sure where to go once the trade is on. Good luck.